When people say gold is up, what do they actually mean? It means prices are high, but how do people actually purchase it? Some do buy physical gold, usually coins or bars. Some buy it through an ETF, which lets them follow the price without actually holding the metal. Others buy shares in gold mining companies, which is different entirely because then you're investing in the business, pulling gold out of the ground. And some traders buy futures, which are really contracts tied to where they think the price is headed next. So when gold makes headlines, it could mean a few different things. It could mean people want something tangible because they are nervous about inflation, or it could mean they're losing confidence in the value of paper money. That's what makes gold so interesting. It's more than just a precious metal. It's a signal about the state of our economy. So with gold prices rising again and reaching new highs in the last year, more people are paying attention. But what exactly is driving this increase? And what does it tell us about the moment we're in? What is gold telling us about the value of money right now?
So if you think about gold price, not so much the price moving up, it's the value of the dollar moving down.
That's Robert Cohen, VP and Senior Portfolio Manager at Scotia Global Asset Management. He's our guest this episode to help break down what's behind gold's recent rise, why central banks continue to buy it, and why more and more investors are looking at gold not just as a commodity, but as something much bigger.
The Toronto Stock Exchange is actually a financial center for the gold mining industry globally. You have probably more listed mining stocks in Canada than anywhere else in the world.
He's talking with us today about Canada's place in the gold story, what makes gold different from a typical market asset, and what role it can play in a diversified portfolio when inflation and volatility are in focus. I'm Armina Lagaya, and this is Perspectives. Here's Robert Cohen in conversation with Natalie Nanowski.
Hi, Robert. Thanks so much for joining us today.
Thanks for having me.
Okay, so Robert, tell me a bit about your background. I understand you have an engineering degree and you work closely with geologists.
I actually come from a Western Canadian mining family. My father was a mining engineer, metallurgist, geologist, my brother as well. And then, I just followed the family footsteps. So understanding mining was kind of dinner table talk, if you want to call it that. So we were always familiar with the mining industry from the time we were really young. I also have 2 geologists working with me. So to really understand mining, you have to understand, 3 technical components. It's mining engineering, mineral process engineering, in other words, the processing of the ore, and then the geology itself. And I always say very simplistically, if you get the rocks right, you get the stocks right. So
that's a good one.
That's what we like to focus on is when we're picking what investments we're buying, we're really starting with, let's see which companies have the best rocks.
So we brought you in because gold has been in the headlines a lot lately. In the last year, it's climbed about $2,000 an ounce to setting new highs of over $5,000 an ounce. Around the time of recording right now, it's sitting at about $4,500 an ounce. Can you take us through what's behind this big increase?
I think the main reason is monetary reflation. Governments have their backs pressed up against the wall. And as you know, they're running probably the largest budget deficits they've ever run. Country debt is at an all-time high. So if we just focus on the United States, their national debt is now $40 trillion. Their interest payments alone are $1 trillion. That rivals medical care costs. It rivals defense costs. So that is a huge amount of money. And the only way for governments to get out of this mess is to reflate their way out of it. We've seen an extraordinary amount of M2, money supply expansion. So governments have been printing money. And from the time governments print money to the time that it kind of works out to higher prices in the grocery store, it's not the next day. It takes about 16 months. This inflation that we're living through is not coming from an overheated economy. It's not coming from full employment. It is coming from monetary expansion. So when people are looking at what is the purchasing power of a dollar, it falls all the time. So that's why we see prices increase. So how do you protect yourself against ravages of inflation? You want to have a monetary asset such as gold. And if you think about gold being the central tenet of the monetary system, it is the only non-fiat currency used by central banks to back their foreign exchange reserves. It's now globally the largest holding of anything that the banks hold. It has just surpassed the US dollar. And if you think about central banks, besides gold and US dollars, where else can they diversify? They want to diversify. So they're always going to be adding to their gold. So you're getting the loss of purchasing power. So if you think about gold price, not so much the price moving up, it's the value of the dollar moving down. But that's coupled with central bank buying, net buying from central banks.
For those who don't know, a fiat currency is a type of currency issued by the government that isn't backed by a physical commodity like gold or silver. So think the Canadian dollar. So let's just go back to what we've seen happen to gold in the last year or so. Is there another time where you've seen such growth from the precious metal in recent history?
I think we're on an especially interesting track on the growth. I've been doing this for nearly 30 years. So I remember in the late 90s when they were forming the euro, there were rumors out there that they were going to sell their gold that was going to be a component of backing the euro. So there was a lot of panic in the gold market. And the gold price fell from just $325 down to $250 an ounce. And, I remember one analyst in particular, and he said, I think gold's going to 400. I was like, no way it's going to 400. Anyway, long story short, it doubled from $250 to $500 an ounce. If anyone out there said it's going to double again from 500 to 1,000, no one would have believed you. And again, when it doubled again from 1,000 to 2,000, no one would have believed you when it was 1,000 saying it's going to 2,000. And then when it hit 2,000, it's going to double again to 4,000. No one would have believed you. So now we're in the era where it's probably on its way doubling from 4,000 to 8,000, and skepticism alive and well as it always has been. So I think we need to break that thinking. Oh, how can it keep going up? I think we have to go back to the beginning of the interview saying what's going on with the monetary system. And it's just simply going to take more money to buy an ounce of gold. It's going to take more money to buy anything, to be honest.
One thing we know is that Canada has a lot of gold in terms of in the ground. We have a lot of gold mines, but we don't have any in our reserves. Whereas if you look at the U.S., they have the most gold in their reserves. Why do we have none?
Well, had I been running Canada back in the 1970s when we sold our gold, we would still have our gold. I think that was a mistake. And I think it was just typical of a Western central banker thinking that gold is a financial relic and it's useless and we'll use the money for other things. I really think it was a mistake for Canada to have sold its gold.
So we sold all of our gold, but so many other countries didn't. And now many in Europe and Asia are even buying more gold.
Yeah, that's exactly it. For example, Poland, Argentina, other countries with kind of the old-fashioned central bank thinking, adding to their reserves. U.S. has the largest amount of reserves, about 8,300 tons, I believe. China's something like 2,200. Don't quote me precisely, but it's that order of magnitude. So China's reserves are about a quarter of the U.S. But if you look at China's foreign exchange reserves, they're enormous. So only like 2% of their foreign exchange reserves are backed by gold. They want to increase that. So they have an insatiable appetite. They're going to probably take 100 years, but they will get there. They're going to add a few hundred tons every year forever. The Western countries are starting to wake up to that again, and some are starting to collect gold again. But in certain cases, gold should be your liquidity of last resort. Sometimes you see countries selling their gold a little anxiously, whether it's to prop up their currency or something like that. It's usually a mistake. There's more gold in your necklace than in our central bank. So
it wasn't a good move, you're saying, basically.
I don't think so, no. If you look at what that would be worth today, it would be a phenomenal amount of money.
Let's just go a little bit more into that. I remember before when we spoke, you explained that gold is such a safe bet because, for instance, if the stock market fails, you still have that physical bar of gold, right?
That's right.
So take us through that. What makes it so safe?
Yeah, I think if you took all the gold mined in the history of the world, it's just over 200,000 tons.
Wow.
If you were to melt it into one cube, it'd be a 5-story building cubed. So it's a very rare metal. And that's why universally, even before we had the attachment of separate civilizations, they all went separately and revered gold as their monetary component. And then when the world sort of became globalized, they discovered that other cultures were actually using gold. So it's got a 5,000-year history as a currency. Paper money is not like that. And then even traditionally, the US dollar used to be backed fully by gold. It just wasn't realistic. There was not enough gold in the world to keep doing that. So it's only partially backed by gold. But I still think that a strong currency, it is backed by some amount of gold.
Mm-hmm. Even though our currency isn't backed by gold and we don't really have any in our reserves, as you explained, we are in a unique position in that as a country, we have a lot of gold, right? A lot of gold underground and a lot of gold industry. Can you explain kind of what that is and why Canada is so unique?
Yeah, geologically, Canada is blessed. Canadian Shield, a lot of gold just in Ontario and Quebec. We have it in the Yukon and British Columbia. But that's one thing we are lucky to have as a gold industry. The Toronto Stock Exchange is actually a financial center for the gold mining industry globally. You have probably more listed mining stocks in Canada than anywhere else in the world. Second most number-wise of listed equities would also be in Australia. So we pay a lot of attention to what's going on in that market when we're investing.
And gold is the reason why Canada's stock market has been doing so well. We have a large gold industry, and so much has been invested in the precious metal.
It's a combination of that and not so much heavy investment elsewhere. So that's why the TSX is something like 15% gold. I think Canada in general, we have not had a lot of successful companies outside of the gold space. That's why we've seen some companies like, BlackBerry come and go. Canada is really known for its banking and for its gold.
Mm-hmm. Is there any way to know just how much gold Canada potentially has?
I think we can take, educated guesses, but Canada is still a young country. We've been exploring probably intensely for gold over the last 100 years, but in the big picture, there's probably a lot more things to be found in Canada.
Do we know just how much, or can we estimate or guess just how much gold can go up? Because it is a rare mineral, as you mentioned, and it's a finite resource.
Yeah, it is finite. Once in a while, we have what I would call a world-class discovery in Canada. And a world-class discovery would be a deposit that is typically, let's say, 5 million ounces, maybe a little less than that, up to 8 million ounces in a world-class phenomenon. Most mines of significance mine between 100,000 ounces a year up to 600,000 ounces a year. So, for example, 600,000 ounce a year mine will likely have starting reserves of 6 to 8 million ounces. And then you sort of engineer a mine with a 10-year mine life. And then as you're mining, you might still have more exploration discovery and extend that mine life. So that's quite typical. It also depends if it's an open pit or underground mine. So an open pit mine, you tend to delineate the entire ore body by drilling ahead of time. So you know exactly what you're engineering and you plan the entire mine over its, say, 10-year mine life. If you have an underground mine, it's different.
And what does Canada's future look like in the mining industry? We know right now a lot is going into exploration and natural resources and critical minerals. What does the future hold for us?
I think it's really exciting because the world needs not only more gold, but they need a lot of more of everything. Copper, you name it. And we have deposits of many metals here versus other countries. So I think we do have a long future ahead. We have the deposits. Canada is a little more difficult to explore than a lot of other places because of our climate.
Right.
Because the fact, if you look at a map of Canada, what is Canada? It is mostly lakes. If you actually look at Canada, we have thousands of lakes. And no roads and no road access. And it's not flat terrain versus other places where you can build an airplane landing strip almost anywhere.
Right, like Australia.
In Australia, and you can explore 11 months of the year, except for during cyclone season. Here we got the spring season, the fall season, where you get the thaw, and then you get, the muskeg and everything, and it's hard to get equipment through. So our exploration seasons are more compact. So what we find actually happens a little bit more on a slower time scale than, say, for example, Western Australia.
So what role do you think gold plays in a modern diversified portfolio?
So there's something called Markowitz-efficient frontier theory. And you can look at the World Gold Council website for some of this data. So they've done back testing of portfolios. What if I add 5% to a portfolio, keep the portfolio the same, but shrink it 5% and add gold in its place? What you will find is it enhances the level of return at a given level of risk, volatility, or you can say it differently, it lowers the volatility at a given level of risk. So it enhances the performance of a portfolio. I think in modern portfolio theory, I think anywhere from a minimum of 5% up to 20%, it enhances your position on the Markowitz-efficient frontier. If you want to go above 20%, then you are taking on more risk, more reward, but more risk. But the shape of a Markowitz-efficient frontier is kind of a horned curve. What you want to do is improve your efficiency around the horn of the curve, where you're actually lowering the risk of the portfolio or enhancing the return at a given level of risk. So that's optimal.
From right now, where do you see gold going in the future? We kind of touched on it a little bit, but what do you predict for gold?
I don't necessarily like to give like a specific dollar price prediction, because somebody might listen to this podcast in some number of years down the road, and then it's past it, and then they'll think, oh, I need to sell my gold. So I'll just use the word up. It's going up. I'm very comfortable owning gold. I worry about stock market crashes. I worry about other problems, whether it's the housing market crashing or things like that. I think with gold, at the end of the day, you'll maintain purchasing power. So even if the gold price falls, probably other things in the economy, their price has fallen as well. So your purchasing power is still maintained. But if you hold on to cash, I think over the long run, you will lose purchasing power. That's why people invest their money in general. They're trying to not only beat that devaluation of paper money, i.e. inflation. I sometimes don't like using the CPI as the measure of inflation, because they use substitution. There's all kinds of things that they add or subtract, and it's not necessarily a true number. Probably the best measure of inflation, just check your own Visa bills.
To look at the cost of food and everything, and the cost of gasoline and all that kind of stuff.
What are you spending?
So would you say that's the biggest misconception about gold, is that people think it won't continue climbing, or is there another misconception that people have that makes them kind of reluctant to invest in it?
I think that a lot of people regard gold as a commodity. I like to not say it's a commodity. It's a monetary asset. It's the only situation where you're mining a monetary asset. Everything else you're mining is a commodity, but not gold. Gold's a monetary asset. So it's in its own unique place in the world in terms of what you're mining and how people look at it. The skepticism is coming from people that don't want to recognize it as a monetary asset or don't understand that it's a monetary asset. They think of it as a commodity. They go, where are we in the cycle? And I'm like, okay, well, over my career, yes, it's moved up and down. It's not a straight line up and down. It's got its volatility, but here we are. So where are we in the cycle? Like a cycle is something that reverts back to where it started. So I don't tend to look at it that way. You don't
think it's going to go back down to $200 an ounce?
No, if it does, I'm cashing out everything I own and going all in on gold.
Okay. Given everything that's happened in the last year with gold, what do you think the main takeaway is for Canadians?
Yeah, I think when you're looking at gold, we always get hit with the headlines. What's the gold price doing in US dollars? Put a little extra on it. What's the gold price doing in Canadian dollars? Because if gold, you can actually have instances where gold is going down in US dollars, but up in Canadian dollars because the Canadian dollar is falling. So particularly if you're bearish the Canadian dollar, you should own gold.
Thanks so much, Robert, for joining us today.
You're very welcome. Thanks for having me.
I've been speaking with Robert Cohen, VP and Senior Portfolio Manager at Scotia Global Asset Management.